and a very warm welcome to Saurav Sir's classes. Today's tutorial will be on accountancy. In case of any query, you can contact us on this number, and if you wish to know more about us, you can check in our website. Now, we know it very well that a party who receives a promissory note, so a promissory note, or receives an accepted bills of exchange, treat this as a new asset under the name of bills receivable. Alternatively, we also know that a party who issues a promissory note or accepts a bill of exchange, treat this as a new liability under the heading of bills payable. Okay? So, now in this tutorial we will be concentrating on the party who receives the bill, okay, and what are the options that are available to him. Okay, so the person who receives the bill is treating it as an asset under the name of bills receivable. We know that, and he has some options. So we will be discussing three options. Let us see. The first option is that the person receiving it can hold the bill till maturity. Okay. The next option is that the bill can be endorsed in favor of another party, and when this happens, in this case, the entry will be to debit the party which now receives the bill and to credit the bills receivable account. So bills receivable account will be credited, and that party receiving the bill, that will be debited. So let me give you an example. So suppose B sends to A the acceptance of C. Okay, the acceptance of C. Okay, so now A receives the bill. Okay, so the entry in the books of B, who initially had the bill, who initially received the bill of exchange, is now sending it to A. So what will be the entry? The entry in this case will be, now we will actually debit the party which now receives the bill. So the person receiving the bill is A now, so we debit A. So A account debit, and to credit bill receivable. Okay, so to bills receivable account credit. And this is in the books of B, who initially received the bill of exchange. Okay. Now the last option available is that the bill of exchange can be discounted with a bank. And if this happens, then the bank will deduct a small sum of money and this small sum of money which is deducted is termed as discount and pay rest to the client, and deducting it, pay rest to the client. Okay. So in this case, cash is received. The one holding the bill will receive the cash, and now the bill receivable is given up. So bills receivable is given up, and there is a kind of small loss, this deduction in terms of discount. So the entry will be, so if we want to look at the entry, it will be bank account debit. Okay. And this is the amount actually received. So with the amount actually received. Then there is a discount. So discount account credit. Discount account debit. This is the amount of loss or discount or the deduction. And you are giving away bills receivable. So 2 bills receivable account credit. And this will be with the amount of bill. So I hope this short tutorial on accountancy was helpful. If it was, then please hit the like button, subscribe to our channel, share our videos, and thank you so much for watching.